If you're thinking about selling your silver right now, this video might just change your mind. What's happening in the silver market in 2026 is something we haven't seen in over 40 years, and most investors have absolutely no idea what's coming. In 2025, silver surged an incredible 147%, its best performance since 1979. But here's what will shock you. According to multiple analysts and market experts, this might just be the beginning. I'm going to show you 5 major forces converging right now that could push silver prices even higher in 2026. And I'm not talking about speculation. I'm talking about hard data, supply chain disruptions, and geopolitical moves that are reshaping the entire silver market. So stick with me, because by the end of this video, you'll understand exactly why holding onto your silver might be one of the smartest financial decisions you can make this year. Let's start with what just happened. Silver opened 2025 at around $29 per ounce. By the end of the year, it closed above $70 and even touched over $80 in early January 2026. That's a gain of 147% in just 1 year. To put that in perspective, gold gained 66% in the same period. The S&P 500 was up about 14%. Silver absolutely demolished both of them. But here's what most people don't realize. This wasn't just a speculative bubble. This rally was driven by fundamental forces that are only getting stronger. And before we dive into what's coming next, you need to understand the foundation of why silver exploded in 2025. Force number 1, silver has been in a structural supply deficit for 5 consecutive years, from 2021 through 2025. Let me explain what that means in simple terms. In 2025 alone, global silver demand reached approximately 1.2 billion ounces, while total supply, including mine production and recycling, was only about 1.01 billion ounces. That's a deficit of roughly 200 million ounces in just 1 year. Over these 5 years, the cumulative deficit has reached nearly 820 million ounces. That's like losing the entire annual production of Mexico, the world's largest silver producer. Why can't miners just produce more silver to meet demand? Here's the critical thing most people miss. About 70% of silver comes as a byproduct from mining other metals like copper, zinc, and lead. This means even if silver prices double, miners can't just ramp up silver production. They're mining for the other metals. Plus, it takes 8 to 12 years to develop a new silver mine from discovery to production. And ore grades at existing mines are declining. Major primary silver mines are nearing end of life, and there are no large new projects ready to replace them. The bottom line, supply cannot catch up with demand anytime soon. Force number 2 is what I call the industrial demand explosion, and this is where it gets really interesting. Silver isn't just a precious metal anymore. It's become a critical industrial material for the technologies defining our future. Let me break down the 3 megatrends driving this. Solar panels are the single largest driver of industrial silver demand. Each solar panel uses 15 to 25 grams of silver in its photovoltaic cells. Why? Because silver has the highest electrical conductivity of any element. It's irreplaceable for converting sunlight into electricity efficiently. In 2014, solar consumed just 11% of industrial silver demand. By 2024, that jumped to 29%, and it's accelerating. The International Energy Agency projects that solar capacity will continue its explosive growth through 2030, with new solar accounting for over 80% of renewable energy growth globally. By 2026, solar is expected to consume over 230 million ounces of silver annually. That's nearly 30% of total global supply just for one application. A traditional car uses about 15 to 28 grams of silver. An electric vehicle uses up to 50 grams, nearly double. Why? Silver is used in EV battery connections, power management systems, charging infrastructure, and advanced sensors. As the world transitions to EVs, automotive silver demand is projected to triple by 2030. We're talking about millions of new vehicles every year, each requiring more silver than the last. This is the newest and perhaps most underestimated demand driver. AI data centers require enormous amounts of electricity. A single hyperscale AI data center can consume as much power as a small city. Here's where silver comes in. These data centers rely on silver in high-performance connections, circuit boards, and thermal management systems to prevent overheating. But there's a bigger picture. Tech giants like Microsoft, Google, Amazon, and Meta have pledged to power their AI infrastructure with renewable energy, primarily solar. A single 500 megawatt solar array to power one data center requires approximately 300 metric tons of silver. Multiply that by hundreds of new data centers being built worldwide, and you can see where this is headed. The International Energy Agency projects that electricity demand from data centers and AI could double by 2026. That means exponentially more solar installations, which means exponentially more silver demand. Industrial demand now represents over half of total silver consumption, and it's growing every single year. Force number 3 is a game changer, and it just took effect on January 1st, 2026, China's silver export restrictions. Here's what happened. China controls 60 to 70% of the world's refined silver supply, not because they mine the most, but because they have the dominant refining capacity. They have 27 accredited silver refineries, while Japan, the second largest, has only 13. Starting January 1st, China implemented strict new export controls. Only large, state-approved companies can export silver now. The requirements are brutal. Annual production capacity of at least 80 tons, a credit line exceeding $30 million, government licenses for every export. Only 44 companies made the approved list. This effectively locks out hundreds of smaller and mid-sized exporters who were key suppliers to global industrial users and refiners. Why is China doing this? It's strategic. China needs silver for its own massive solar industry, electric vehicle production, and electronics manufacturing. The country is in the middle of an aggressive clean energy transition, and they've realized that whoever controls the silver controls the transition. Even Elon Musk raised the alarm, posting on X, "This is not good. Silver is needed in many industrial processes." The impact is already being felt. Companies in North America and Europe are scrambling. Some buyers are reportedly offering $8 to $10 per ounce above market price just to secure physical silver. This isn't just a temporary disruption. China has made silver a strategic resource on par with rare earth metals, and the U.S. responded by adding silver to its critical minerals list in November 2025. We're watching a geopolitical wrestling match over silver play out in real time. Force number 4. Physical silver inventories are being drained at major trading hubs around the world. In Shanghai, exchange stocks fell to their lowest levels since 2015. In London, one of the key vaulting centers for silver ETFs and industrial users, inventories saw notable drawdowns as metal flowed to India and Asia. The COMEX and LBMA inventories both drew down significantly through 2024 and 2025. Available good delivery bars tightened dramatically by year's end. Here's a critical technical signal that shows real stress in the market. Silver went into backwardation, and it was the deepest backwardation since 1980. What does that mean? Normally, buyers pay more for future delivery than for immediate delivery because of storage and financing costs. Backwardation is the opposite. Buyers are paying more for silver today than for future delivery. This signals one thing: urgent demand for physical metal right now. People and companies need the actual metal in their hands, not promises of future delivery. Silver lease rates, what it costs to borrow physical silver, spiked above 5% multiple times in 2025, well above the historical near-zero levels. When holders of physical silver demand such high premiums, it means they're extremely reluctant to let go of their metal unless they're paid handsomely. This is not paper speculation. This is real physical scarcity playing out in the market. Force number 5, massive investment inflows and government accumulation. Silver-backed exchange-traded products saw inflows of approximately 187 million ounces in 2025. Global holdings reached 1.13 billion ounces, just 7% below their all-time peak. Why are investors flooding into silver? Multiple reasons. Concerns about inflation and currency debasement. The Federal Reserve's rate-cutting cycle making non-yielding assets more attractive. Fear of government debt levels and dollar sustainability. Geopolitical tensions and the need for safe haven assets. But here's what's really remarkable. For the first time ever, governments are actively buying silver. In 2025, the United States officially designated silver as a critical mineral. Russia confirmed its central bank is allocating funds to purchase silver. China implemented export restrictions to keep silver inside its borders. When governments move from passive observers to active participants in a market already facing shortages, the supply-demand equation changes fundamentally. Silver is no longer just an investment metal or industrial commodity. It's becoming a strategic national resource. So where are prices headed in 2026? Let me share what major analysts and institutions are predicting. And remember, many of these same analysts significantly underestimated silver in 2025. At the beginning of 2025, the consensus forecast from major banks and analysts was around $32 per ounce. Silver blew past that and hit over $70. They got it wrong on the low side. For 2026, here's what they're saying now. Conservative forecasts. UBS, $55 per ounce by mid-2026. Most major banks, $50 to $65 range through 2026. Moderate forecasts. Metals. Focus, $60 per ounce by late 2026. Various analysts, $65 to $85 range. Bullish forecasts. BNP Paribas, silver could reach $100 per ounce by end of 2026. Gold Silver's Alan Hibbard expects silver to potentially increase by over $100 per ounce, reaching $175 plus. Some analysts, $142, $150 plus, not out of the question. The wide range of forecasts reflects genuine uncertainty, but notice that even the conservative forecasts are bullish. The bearish case is basically absent from professional analysis. Why? Because the fundamentals are that strong. 5 straight years of deficits continuing into 2026, industrial demand accelerating, China's export restrictions, shrinking inventories, government buying, investment demand surging. Now let me be clear, I'm not saying silver only goes up from here. There are risks to consider. Risk. Number 1. Short-term volatility. After a 147% gain, profit-taking is natural. We've already seen some pullbacks. Silver could consolidate or correct before moving higher. Risk number 2, Federal Reserve policy. If the Fed raises rates instead of cutting them, it could temporarily pressure silver prices as yields on other investments become more attractive. Risk number 3, Economic slowdown. A major recession could reduce industrial demand, particularly from manufacturing and construction. Risk number 4, Technological substitution. If silver prices stay very high, industries will work harder to use less silver per unit, called thrifting, or find alternatives, though this takes time. Risk number 5, Supply response. Eventually, very high prices could bring more supply online through increased recycling or new mining, though as we discussed, this takes years. These risks are real. But here's my take. There's short-term headwinds against long-term tailwinds that are unprecedented in silver's modern history. So, should you sell your silver? Here's what we know for certain. The silver market is experiencing a structural transformation. This isn't a speculative bubble driven by Reddit traders or hype. This is 5 consecutive years of supply deficits. Record industrial demand from the technologies defining our future. China weaponizing silver exports. Physical inventories draining worldwide. Governments declaring silver a strategic resource. Investment demand at near record levels. The confluence of these forces is creating a setup that many analysts believe hasn't existed in decades. Could silver correct in the short term? Absolutely. Markets don't move in straight lines, but the long-term trajectory, supported by fundamental supply-demand dynamics, points strongly upward. This is why I titled this video, Don't Sell Your Silver. Not because silver can't go down temporarily, but because the opportunity cost of selling before this story fully plays out could be massive. Remember, in 2025, silver gained 147% while most analysts expected $32. What if they're underestimating 2026 the same way? The decision is yours, but make it based on the facts, not fear. If you found this analysis valuable, please hit that like button and subscribe for more silver market updates. Drop a comment below. Are you holding your silver or taking profits? I read every comment. Thanks for watching, and I'll see you in the next one.